All right. Welcome everyone, and thank you for joining today's Bloom Impact Investing webinar on the topic of carbon market and offsets, the good, the bad, and the ugly. My name is Camille. I am the CEO of Bloom Impact Investing, and I will be your host today. But before we start, I would like to acknowledge the First Nations people as the traditional owners of the land on which this meeting is taking place today, which for me is Meanjin, Brisbane. I recognize the country north and south of the Brisbane rivers as the home of both the Turrbal and Jagera nations. I pay deep respects to the elders past, present, and future. Welcome again. It is a pleasure to see you all. And for people who are new to this webinar today, let me introduce Bloom and the purpose of our community events. At Bloom, we empower people to invest and do well, and fight climate change at the same time. We are on a mission to make climate impact investing easy and accessible. With Bloom, anyone can invest in a diversified and impactful green fund. All of this via a simple mobile application. Head to our website to learn more. But part of our mission is to offer educational opportunities like this webinar today to propel the voices of impact investing and sustainable finance experts far and wide. At Bloom, we think that sustainable investing should be accessible to everyone. And we see a future where a carbon-free and inclusive economy allow people and the planet to thrive. Quick housekeeping. Please note this event is being recorded. The webinar will be made available to the attendees or anyone who has signed up to the Zoom link after the event by email. And a legal note, please be aware that the information provided in this webinar is general in nature only and does not constitute personal financial advice. Before acting on any information from this presentation and this Q&A, you should always consider how appropriate this information is in regards to your personal objectives, financial situation, and needs. Now that this is out of the way, also note that this is a safe space. We want our discussions to be as inclusive and as helpful as possible. So you can ask any questions throughout the event by typing in the chat. We'll ask John at the end the questions and you'll get a chance to exchange with him. We'll keep 15 minutes at the end for the Q&As. Now, allow me to introduce today's webinar topic and our speaker. So today we are tackling a big, bold, thorny issue, carbon markets and offsets. We only have an hour, but it's a fascinating topic, so I cannot wait for this discussion. So recent dramatic momentum has been seen in carbon markets and really showcases a carbon conscious pathway for industries moving forward. We've seen in the past the global carbon market index returning 108% in 2021. And that really caught the attention of a lot of investors. So the carbon market has always been a strategy to keep major polluters accountable and incentivize them to lower their emissions. However, there's been lots of measurement problems, lack of transparency from businesses, and a lot of scandals have emerged from carbon markets. So today, to discuss this fascinating topic, I have invited John, CEO at the Carbon Market Institute, and we're going to dive into it to really understand the good, the bad, and the ugly of carbon markets. We'll start from the start. We'll start from the basics. What is the carbon market? How does it work? And then we'll move into some more tricky questions. So how do we measure emissions? Why are there some loopholes? What can we hope and expect in the future from carbon markets? Our special guest today is John Connor, CEO of the Carbon Market Institute, an organization dedicated to helping businesses seize the opportunities in the rapidly evolving carbon markets. John is a wonderful expert on the topic. We are so honored to have him today. Let me introduce him quickly, and then we'll dive straight into the questions. John has over 25 years of experience in public and privacy policy, with a focus on building the evidence and the strategic partnership to drive change. Currently, he's the CEO of the Carbon Market Institute, the industry association that helps business lead the transition towards net zero emissions. John works with over 100 companies spanning the carbon value chain, from primary producers, carbon service providers, and emission-intensive companies. But before the Carbon Market Institute, John has had plenty of experience as well in driving our climate transition. He has worked in Suva, directing the Secretariat supporting the Fijian government's presidency on international climate negotiations for the COP23 presidency. Is that right, John?
Yes.
So that means John had a wonderful first-hand experience with Pacific leadership and innovation in the face of the green climate crisis. And prior to this, John has also led the Climate Institute, which pioneered approaches which put focus on financial institutions to drive change. So John, thank you so much for taking the time to speak with us today, and welcome.
You're very welcome. Thank you for that introduction. And may I also recognise the traditional owners of the country I'm joining you from, a Gadigal country here, pay respect to elders past, present and emerging.
Wonderful. Thank you, John. So John, like I said, our ethos at Bloom is to make things really accessible for everyone. So we're going to start with the basics. Can we start with defining the carbon market? What is it? What does offsetting carbon mean? And what is a carbon credit?
So there are two kinds of carbon markets, but at their core is actually trying to put a value on carbon reduction and on carbon emissions themselves. And so you've had this tortured debate about putting a price on pollution or whether you actually value in carbon reduction. And carbon markets really are creating, it's a policy-driven markets, which try to, at their best, and what they should be doing as a means to an end of actually decarbonising and recognising the shared commitment and commitments that even the Australian government and opposition have to achieving not just net zero emissions by 2050, but to actually help the world effort to avoid global warming, going to limit that to well below 2 degrees, but also to limit that to as best they can to 1.5 degrees. And those things matter. And also drive an overarching carbon budget about how much more we can put into the atmosphere. And to keep those limits, it's getting a smaller and smaller carbon budget. Like any, the more we continue to spend, the more the quicker we're going to have to change. And my time in Fiji made very clear the impacts there, and impacts of we're already at about 1.1, 1.2, 1.3 warming, and about the impacts. So a carbon market ideally guides that down, and so you put a value on those emissions and incentivize the purchase of cleaner, of decarbonising your industrial processes and investing in decarbonisation across the economy. Now, we're perfect. Is a whole of economy cap on emissions, which would then issue allowances for any emitter that then is they then either make good, and if they do better than others, then they can sell that to others who are making a slower transition in a reducing kind of like musical chairs where you keep taking out through each phase, and thereby driving up the value of each of those units as you move along. We had not completely that, but probably about 80% of the economy coverage with a carbon pricing mechanism that was established under Julia Gillard, and that was a compliance one. And so emitters would have been allowed to have allowances, were allowed, there was 2 years of functioning of this. And they also set up alongside that what was called the Carbon Farming Initiative, the ability of the agriculture sector, which wasn't covered, to actually provide offsets into that from the land sector, that companies, as they were making that decarbonisation pathways, if they couldn't do it within a 2 or 3 or 5 year phase, that they could, as they brought in infrastructure, they'd have these offsets to avoid penalties. Now that obviously Tony Abbott pulled that apart. And I guess globally, we are seeing this mixture of what we call compliance and voluntary markets. And so, Europe, for example, is one of the larger compliance markets, and we're seeing them though emerge in China and California and other places around the world where there are those sorts of requirements. But alongside that, we're seeing voluntary markets, and so I always use inverted commas when I talk about the voluntary markets, because often that's because of pressure from people such as yourselves, investors, community stakeholders are pushing companies to say that we need to be carbon neutral, we need to be on that pathway, and as they decarbonise, they might need offsets, and so we are seeing a voluntary market there, where those offset units for the voluntary markets are brought there to aid in that carbon neutral transition. But there are a whole range of integrity and other issues which we'll come to, and should be within a hierarchy of, first of all, trying to avoid within that company itself, and also to reduce emissions, but then the offsets at the end. And then there's a whole question, particularly in the voluntary market, about the co-benefits that might come with those offsets. So that's hopefully not too much of a complication of a scan over the carbon markets.
No, that's a good overview. Thank you so much. And just to clarify, so carbon credits, are they different from the voluntary versus compliance market? Like, can you explain what's the difference there?
No, essentially, systems try to have to measure the ton of abatement that might be there and be measured, and that's often easier in industrial processes. And so, we know a ton of coal has a certain emissions intensity, and if you're reducing that, then that's different. There are then processes by which you develop up carbon credits in the other sectors. In the land use sector, for example, it's in Australia, and Australia is one of the leaders of this, where they develop up methods to generate the credits. And in Australia, we call them ACCUs, Australian Carbon Credit Units. And so there's quite a process. There's about 39 different methods, most of which are in the land sector, but which are in avoided deforestation, human-induced regeneration, where farmers are encouraged to regrow or support the regrowth of vegetation, soil carbon, a whole range of these methods that are there. And those credits, there's a process where they try to make assumptions about how much carbon's per ton, but basically it's a ton of carbon. But when you get into the land sector, there's a whole range of conservative assumptions and checks and balances that go into that, and some of which in the focus of public conversation right now.
I was going to say, that's a perfect segue. So in March 2022, this year, a whistleblower who spent years working on the integrity of the Australian government's carbon credit system has launched a huge attack on the scheme, describing it as a fraud that was hurting the environment and that was also wasting taxpayer funding. So I'm sure you remember this recent event. Why all carbon credits aren't created equal? Why can we see people being unhappy with this system? Can you give us some examples of when things go wrong and perhaps when they go right?
Yeah. Well, the worst examples of where this has gone wrong is in actually more, not actually in land-based sectors, but in Eastern Europe, and this is why people made jokes about the Borat and Kazakhstan credits and the like, where and this was in the scheme prior to the Paris Agreement, which was agreed in 2015. So there was the first round was a Kyoto, and this is when we're talking about the United Nations setting up scheme, and had responsibility on developed countries to have emissions reductions. And if they couldn't achieve that, they could actually buy in from developing countries credits there. And so there's been some quite bad examples there where we come to the principles of additionality as one of the key issues of we should only be rewarding investments in things which wouldn't have happened unless that investment took place. And so there were some fairly ugly ones where projects were taking place, particularly around some industrial processes and refrigerants and other sorts of things there, which really didn't stack up. And so we saw the European scheme move away from having some of those offsets. As I mentioned, here in Australia, there's a range of those which are the methods which range across the land use sector and into some industrial methods. The attack from Andrew McIntosh and others was around, in particular, landfill gas and human-induced regeneration methods. And so there's a debate there. We thought there was some pretty sensational language used when that came out, and actually ignored some of the checks and balances that we have in behind the methods and their development and their processes, which we've been doing for about 10 years. And so it is important not to assume that this is all perfect, and we think we need to be looking at some of the issues that are raised. But there was a pretty wide swinging attack there, in which we're following up. We've been following up on some of those issues. But essentially, the question is, are the activities that are being supported for farmers to manage their land differently, to stop clearing their land? And then when we come to other ones which aren't particularly in the focus of those debates, when we're actually doing extra planting, how do we make sure that planting is then maintained and looked after? So there's a range of issues that were raised in those attacks. So and whistleblower is a funny term. I mean, the person involved was actually heading up one of the integrity processes and signed off on those in the past. So we've got to work through these issues. It's part, I think, of a maturing industry as we grow scale, and we need to open and be open to some of this scrutiny.
Thank you. That's interesting information to add to the sensational media titles, I guess. Can I ask, John, from a scientific point of view, who defines those methods of quantifying impact? You mentioned that there are, just for land use, if I understood correctly, there's over 30 different methods. So who actually does this work?
Yeah, so we have a range of bodies involved in this process. And again, Australia is quite unique in this, in particular that it's basically it's government backed. And so, and there's been a bit of a ebb and flow, if you like, of how these are done. So what's key is the methods. So as I say, over 30 methods. And so in a particular area, a proposal comes forward. One, for example, right now, another one is blue carbon, one where they're looking at how we might accredit works which actually remove weirs, which allow water to come back in and mangroves to regrow. And so there are processes of consultation as that's developed up. At the moment, the Clean Energy Regulator is manages that process. The 5 are selected by a minister each year under a recent innovation. But then there's a regulator that has a process for that. There's public consultation around that. There's scientific advisory, technical advisory panels. There's some public.
Okay, so the regulator engages with the scientific community in a consultative model to inform how carbon credits are measured.
So they do that. Then there's an appointed emissions reduction assurance committee that then needs to be run past. And then there's a recommendation that's made up to the minister, and they make that as and if that's acceptable, then there's a legislative instrument. So it's actually a reliable instrument. So this is ways in which there are checks and balances that can be.
So when we buy or sell an Australian credit, it has gone through this process of being reviewed and approved, both from a legal and scientific point of view. And that's the standard.
Yes, and so when it then comes to a landholder making an investment, saying, and then the working with carbon service providers that are out there to actually say, okay, and then you have to apply to the regulator to say, we're going to have this project. We think we'll generate this much. They say, yes, that's fine. And then there's an annual reporting process where they say, we've grown so much carbon this year under this method. Can you sign off on those?
That's right.
And
so just to go further through the arguments so that we all understand, and sorry, I'm asking all these questions here, but let's say I'm a farmer, and at the end of the year, I want to leverage my practices to sell some credits and earn some revenue from my land. How does that work?
So there are intermediary service providers and a couple of different models in that, and some of which would take over the full responsibility for going back to the regulator and saying, here's our report. And these are then independently audited, by the way. So there's a whole audit industry around this as well. All of the landholder themselves then submit back to the regulator, but generally it's a bit like an accountant, right? There's a whole people helping you with these processes, taking that back, and then the regulator says, okay, yes, we're confident with that, and we issue you these ACCUs that you can either sell out into the voluntary market or particularly after the Tony Abbott removed the carbon pricing mechanism, the government itself became the major purchaser, and so that's the one which they can that back.
Okay, so at the end of this process, if I'm a farmer or a company that has been able to sell more than purchase, I will receive funding. Which is a multiplier of however credits have sold times the price at this point in time. And is that how it works?
Yeah, largely. And so there's certainly the service providers generally take a bit of a cut on the way through for helping you do that. But generally about 70% or more, it goes back to the farmer. And I've been out there to some of these farms, they call that carbon money, then they can use that. In other projects like Savannah projects, which is where Indigenous communities in particular are doing different burning practices, and then that's money back for them to spend as they see fit.
Okay, wonderful. Thank you. Now, I would love to take this discussion around the Australian versus the global context. So you've explained really well that we're talking about a global issue and a global, I guess, a budget of carbon that we think we can spend. If my research is correct, the private market in carbon credits here in Australia, at least last year, was worth around 150 million. Is that correct? Does that sound right? My question is, how does the Australian market compares to the global and European one? And how might we strengthen it here? You said that Europe was leading the way in some ways. Can you tell us a bit more about Australian versus the rest of the world?
So yes, we've got Europe is a much bigger, and that's a compliance market, and they're still working out their rules too, by the way. I mean, this stuff is, as I say, policy-driven. These are policy-driven markets, and we need to continually to check on the quality, on the speculator involvement, all sorts of things. But that's the biggest in terms of value. Although we are seeing growing markets in China, which actually have even broader coverage, but because of various elements, as that's growing, there are lower prices. And then we see in the global voluntary market substantial investments there, and I think that's looking at clocking over $1 billion in this last year for the first time, when people make varying assessments of where that will be by 2030, even $30–50 billion are being quoted. And out there in those markets, there are also internationally some independent verification frameworks. So the framework I described in Australia is unique in that sort of government run. There are independent verification frameworks, Verra, Gold Standard, and others in the global voluntary market. And so there are a range of some of those that you see out there in the international dimension as well.
Can we stop here for a second? So in this audience, we have investors, but we are all consumers, right? And more consumers are encouraged to offset their emissions or offset their car, offset whatever, buy a product that is net zero. What do you make of this? Do you think it's a positive trend to push onto the consumer this responsibility to offset their emissions? Or should things rely on the industry, bigger companies to offset their? It's an old age debate.
We should all be in, basically. And I think it is important not to be distracted and have it just on individuals. It's absolutely, this is big infrastructure and systems that need to change. I mean, in Australia, our emissions are 30% from the electricity sector, 30% from industrials, and then 15% odd between transport and agriculture. And we have a higher agricultural profile than many developed countries. So let's not underestimate about the importance of structural change. And so why it's important in Australia, for example, the debate which will in some way be resolved on Saturdays around the safeguard mechanism, which is a nascent compliance market that's here in Australia. We can perhaps talk about in a moment. But you know, we all need to, we have an urgent need to reduce. It's already damaging. We're seeing that around us now, that the warming that we've already seen. And so everyone should be making a contribution, and we're trying to build a culture as well as a compliance framework of reductions. And so I think it's a very positive thing that consumers be enabled to be part of that, and that we, but that to be part of a whole value chain, if you like, of you know, we need to account for carbon in our life as much as we do with cash and other things. So that's important, but we definitely shouldn't underestimate the importance of getting proper industrial decarbonisation policy frameworks in place. And
thank you. And John, as a consumer, are there things that we should be aware of? You know, we know that greenwashing is more and more prominent. Some companies are using, you know, offset as a marketing tactic. Some are genuine, some really try to do a difference. What can we do as consumers to be careful not to buy the wrong thing? Do you have advice on this?
Yeah, well, I think it's important to have a look at who's providing. I should also say, again, part of the checks and balances is that people who are selling, and certainly the ACCUs, need to have, it's treated as a financial product. And so they actually need licenses, and they're approved under ASIC. And so if there are any questions, and you can go to some of those regulators. CMI is set up and is running one of the world's first carbon industry code of conduct. And so we do urge people to look at those providers and have them as signatories. So that's a space that's safer there, and we're hoping to see more service providers available in that area as well.
Some offsets use standards, such as the Gold Standard is pretty well known, the Verra as well. Is that something we can trust?
So they're well-known international ones, and they have these third-party verification frameworks and the like. And so the federal government here also runs Climate Active, which is a carbon neutrality scheme, and that and they do a process where they vet, and we're actually getting we've got the Climate Change Authority reviewing some of these right now as we speak. The offsets which are available into that. So there are questions of some that might come underneath those standards. They're generally pretty good, those two standards you mentioned. But,
okay, so that's what we need
is an interesting space to check who's approved in that space.
Okay, Climate Active, Gold Standard, Verra, and think about the provenance of the credit. And if it's an ACCU, it means it's an Australian credit, and it has been I guess thoroughly reviewed by a full legislative system, is what I'm taking away from this. Now, let's let's get into the impact on investors. So you mentioned that investors are driving the demand, and more companies are watching this demand and complying with it. But carbon markets are also referred as an opportunity for investors and a threat. So we've all heard this term stranded assets, as in what will become of our assets and investments in a carbon constrained world. So what if companies have to pay even more for their I guess environmental externalities? So can you tell us more about the carbon market performance, what drivers are behind it, and how can investors A, get involved, and B, perhaps benefit or invest in it?
Yeah, so it's across the spectrum. So investors as asset owners and should be asking those who manage those assets how they are managing them for the clear trends in terms of policy requirements to be decarbonising. And so there's a great whole ecosystem that's now being developed up. And since Paris Agreement, there's a task force on climate-related financial disclosure. Many of you will all be familiar with that. We're seeing the Investor Group on Climate Change and their Climate Active Action 100 criteria there. So they're things to be looking at in terms of, and they're applying that sort of ruler across some of those more emissions-intensive companies. And so that's their tools to be looked at. Investors also need to be looking into the supply side, and so there are significant opportunities and projections of what we're going to need to do. I mean, we're going to need to not only get to net zero and have this decarbonisation, but we're at dangerous levels now and going to get even more dangerous. So we're going to get to negative emissions, and so investors making investments into the supply chain and maybe in land sectors as well as into maybe industrial innovations that might be going on. And so there are significant opportunities there if the directions are.
So can we, thank you, John. Can we stop here for a second? All right, we've talked about investors being able to support and invest in those things. Can we give practical examples? So we're talking about carbon farming, but perhaps technologies that help measure and reduce emissions. Can you give us, we're not giving any advice or recommendations here, but can we unpack some examples of how money can be invested in carbon at the moment, today?
Well, and so look, we've seen investors come in behind some of those carbon service providers. So KKR have come in and bought a big slab of green collar, Adamantium, and bought into climate friendly. We're seeing some vertical integration as some of the actual emission intensive companies are purchasing some of these carbon service providers, and so there are offerings there across that chain. There are the technology provisions, and so there are a whole range of startups now emerging and saying, well, look, we think our soil carbon measurement is the bee's knees. You can actually have a look at this is going to be a winner. Our practices here in agricultural advice are going to be winners. There's a whole ecosystem there that's actually that is important that we look at, and a whole bunch of providers. I should say we've got a marketplace directory on our website, and we'll be getting that shortly. So on the Carbon Market Institute site, so where people can go and have a look at.
Is it already online? We'll share it after the event.
Yeah, please. Yes.
Okay.
In fact, we're just updating that, but there is a version of that there now. But where you can have a look at a range of the providers from across our membership and others who where you might want to look at. And so there's a range of ways in people which can invest in those solutions and back a few horses in this decarbonisation race and hopefully make them good ones.
Yeah, that's right. Thank you. And whilst we are still talking about investing and performance and how that impacts investors, can you tell us a bit more about the carbon price? So last year it had reached some unprecedented levels. We've seen the European credits, I think, getting close to 100 euros or 70 euros. I can't remember.
Okay.
But recently in Australia, it had a bit of a dip. So can you tell us more about where we are now?
Yeah, look, so globally, prior to the Ukraine invasion, there was we were seeing significant increases in prices, and that's partly of the growing momentum in behind the realization for need for net zero emissions. We saw also carbon market rules clear some international carbon market framework rules, clear some big hurdles, not all of them yet, but in Glasgow at COP26. And so there's this broad trend increasing there. Australia mirrored much of that broader trend, and as companies began to price in that with the bipartisan agreement on net zero emissions, knowing that this is going to come at them, and so they better start to look at their long-term contracting. Now, what happened in Australia, and so we saw last year it started off at $16.50 a tonne, and it actually zoomed. I said it was faster than house prices, up to almost $60 a tonne. What happened that saw a significant drop of that is that what happens when Tony Abbott took over replaced the carbon pricing mechanism, he replaced that with a mechanism where the government was the major purchaser in the emissions reduction fund. And for a number of the first 4 or 5 years of that, they were buying fixed contracts. And so the farmers and the service providers were saying, we will provide you these units, and there's a fixed contract they have to provide. More recently, they're doing a de-risking process where they're allowing them to have the option to give that in or to sell it into the voluntary market. And so there's a whole slab, over 100 million ACCUs of fixed contracts, which was then made available into the marketplace. And to give a sense of the scale of what's under the rules, is about 17 million ACCUs, equivalent to a tonne, are generated each year. And this will enable over the next 10 years, probably about 10 million tonnes a year to be put in. So you get that sense of extra supply. And so the economics obviously was that we saw a crash.
Yeah, more on offer, so prices go down.
So we don't have time to go into the whys and wherefores of all of that, but the market reality of that was we saw that significant price. And so we're seeing it seems to have bottomed out around about the $30 or so per ACCU. We're also seeing what we call stratification, where the different methods get different value in the marketplace. And this is particularly, when the government was the main buyer, and they were buying 95% of that, it didn't matter so much, and they were buying just at the least cost that they could. But now in this voluntary space, we're seeing this stratification across different method. People wanting to be more comfortable with whether ones are verified or not, or with less controversy. So that's something.
There's a premium.
Indeed, and what we haven't touched on is the co-benefits that might go with that. So those Savannah ones that I mentioned before, with those that are largely going to Indigenous communities, they command a much more significant premium, because you can have the great value that you're contributing for Indigenous benefits going into those local communities, and you've got a story that can be told around those credits.
Yeah, that's right. And whilst you touch on this co-benefit topic, can you tell us more about the other benefits and outcomes of having a strong, healthy carbon market here in Australia?
Well, other ones. So what we are seeing, and we just recently released a carbon farming scorecard, having a look at the states and the Commonwealth, and you could share that with investors if you like, as a way of how the government's supporting these marketplaces. Queensland's a leader in that, because they've been innovating with what's called the Land Restoration Fund, where they've basically been out there purchasing these additional benefits on top of that. And so they were paying more if there were forests being regenerated, or you were protecting areas in the Great Barrier Reef catchment, for example. So you're providing additional water quality benefits. So you're also protecting particular important areas of biodiversity. So there's a value being put on that. The federal government is, and we're seeing other jurisdictions looking at that. The federal government's got a Carbon Plus biodiversity scheme it's been piloting, and looking at biodiversity stewardship and other elements within that as well. So these are other benefits which are there, which are getting valuation, and we're seeing a task force on nature-related financial disclosure. So there is natural capital of things in the whole round of accounting for nature. So, and sort of not just being climate positive, but being nature positive. So these are new trends that your investors will probably.
That's right. And I think investors are increasingly interested in those themes and nature, investing in nature capital. But to be honest, and from our perspective at Bloom, we've looked into this, and it's not easy to find some vehicles that are open to the private market. So yeah, can you tell us more about investing in nature, in nature capital? Do you see this as a growing trend, and do you think more and more investors will be able to access those assets?
Yeah, look, this is definitely like a mega trend that's there. As we say, as we see these accountabilities and people put the value on that, and as we have a biodiversity crisis emerging as much as a climate crisis, and so that focus will be put on that, and it's the importance, particularly as impact investors, to be generating those. Again, it goes then to the verification frameworks. How can we be sure about this? But we are seeing greater data and greater technologies, and people have done a lot of work in this area. There's an organisation called Accounting for Nature, which is being used and been backing up some of the Queensland scheme. Disclosure, they're one of our members as well, but it's a highly regarded and emerging scheme. They're heading off to Davos to talk about their work, for example. But there are other frameworks which are out there trying to verify and assure that there's those environmental gains as well within that. And then there's other controversies around whether you can have biodiversity offset markets. It's another question there.
Actually, yeah, that's
answer that question that's in the chat, if I may. Which is an interesting dimension there from Andrew, which is it goes to the supply chain, and so and a key question for farmers, I guess, also people who are investors in agriculture, and how can they affect with their companies and up the value chain. Again, we're seeing pressure on companies to be carbon neutral and on their product offering. And so Coles, for example, is offering carbon neutral beef. We're seeing Mars and Kellogg's and others become investors, Lion beer making. And so they're looking at their scope all up their chain of both what is in their actual industrial processes when they make those products, but also who provides that. And so their efforts to be carbon neutral are expanding up the supply chain, and so farmers themselves are being put under pressure to not only be how they can get ACCUs and get that revenue stream for that, but how do they make sure that they're assuring and perhaps not selling too many of those, so they can be clear that they are being neutral, carbon neutral, because you can't use you can't double count there at the farm as well. So that's one of the issues and ways in which that can work up the value chain.
Yeah, that's right. And I guess that's where the offset concept has received some resistance, right? Because when you hear carbon neutral beef, there's something, difficult to accept here when you know how much emission and damages can be driven by this industry. So consumers can be confused by the idea that it's just an accounting balance, but it's hard to say that beef will be carbon positive, because at the end of the day, the emissions are within the industry, whether we offset them or not. Although the offsetting piece might get us closer. So do you think all industries should adopt? How do we make sure that not only companies make an effort into offsetting their activities, but also decrease the core emissions of their activities?
Well, so you've got to have this hierarchy I spoke of earlier: of avoid, reduce, and then offset. And so when you've got some things where it's harder, like beef, like your air travel, at the moment we don't have easy substitutes there. That's where offsets can play an important role. Whilst we still need to put the knocker on those to be doing better, and so pushing into different fuels and and different food fodder, and they are looking at different things there, and so that's where these commitments are important, because they actually incentive. There should be an incentive to get to that full decarbonisation, and that's why offsets play an important role, because the fire we do have a burning fire right now, and so we need to have
solution.
all these elements contributing.
Yeah, we don't have the luxury of having everything perfect straight away. Done is better than perfect, for sure. There's a great question from Mitchell, which is actually a great link to the discussion around trust and offset. So Mitchell says, "Hi John, thanks for the overview. Over the last 6 months, around 25% of various projects have gone onto blockchain via the Toucan protocol and retired via Klima DAO. What are your thoughts on developments as at the intersection, of crypto and climate? Can this be one of the solutions to drive more trust and integrity in the carbon market?"
Well, a few issues here, and it's around, I mean, the new technologies around this, around traceability, around the traceability of these, and blockchains provide some ways of doing some verification along each of the stages of this process. We are also seeing some tokenization there, where there's different ways of access, and particularly for consumers into this space, where you're actually they're even dividing up parts of these carbon credit units, and so you might be purchasing a thousandth of
a fraction of a credit.
A fraction of those as well. And
do you have names of those tokens, or is that still in development and you cannot really share?
No, so I think it's Beta Carbon.
Sorry, I'm picking your brain.
Yeah, Beta Carbon is one of the providers. I think it's a name now also a member, or just recently providing that into the Australian markets space, and they say they're providing another way for consumers to do that. They're doing that and using the ACCUs as their base. Some of these other internationally, I have to admit I'm not fully across the latest, because this is really happening late with the Toucan protocol and Klima. But and then it goes to some of these also whether it goes to the Bitcoin and backing up all of these, which are very high energy users as well, and so there are some issues there with that. So again, it comes back to being, I mean, if are those units well verified, and is there broader confidence in those?
Yeah, so I guess it's a new technology, but the same base principle applies.
You still need to do your due diligence. You still need to check those issues, and it's in some places where you've got some frameworks that give you some confidence in that, but you probably always need to have a bit of due diligence as well.
Do you think ultimately the entire carbon market will move on to a blockchain technology?
Look, I think there's going to be range of platforms, and so what works easiest, and so I wouldn't want to gamesay any particular technology out there, but I mean, some of these do provide ease of confirmation, or some others have their opportunities as well. And I think it's about how we build into this whole big data, big management. There's very exciting developments in spatial data and assessment, which will also hopefully provide some greater assurance around how long-lived some of these carbon sequestrations are as well.
Okay, thank you. It's already 12:50, so I'm going to ask you a couple of more questions, and then we'll open up the floor to our audience today for more questions. I guess my last question is around trends and your expectations for the next few years. What do you think carbon markets will look like by 2030? And who will be buying and selling the credits? What are the trends that investors should be looking out for?
Well, certainly my hope. I mean, look, there's different trend. People can see the way these directions are going. There's a really good project I was involved in a while back called the Inevitable Policy Response, and so that's actually run with UNPRI, the global the body for some global investors through the Principles of Responsible Investment. I really checked that out as to some of the directions, and so they make some assumptions that this stuff's inevitable, right? And also the importance of the Paris Agreement ratcheting process is that we, it's not set and forget. We're brought back each 5 years for various processes for stronger commitments. Whomever is elected on Saturday is going to actually have to develop up our 2035 target, not just the 2030 target, and pressure on that being increasing. And if the less we've done to 2030, the steeper that next slab is going to be. And so, these trends are pretty clear. We're going to need to continue to decarbonise. There is bigger and bigger risks of stranded assets. We're going to need not just carbon markets, but supporting policies. And so it's nuts we don't have energy efficiency standards for vehicles, for example, and both sides are carefully avoiding that because it might look like a carbon tax, but we're going to have those. We're going to have greater policies in agriculture and other areas. But carbon markets, I think, do provide that ability to funnel investment into the areas that we need to, and particularly when we link them into some of the international markets, can provide additional co-benefits in developing countries, which are going to be important as well. But end of the day, we've got to be clear that they're driving the emissions reduction, that they're there for what, as I say, we need to be a means to an end.
Okay, thank you. I'm going to welcome anyone in the audience to ask a question. This is your chance. You have joined with us for a couple more minutes, so make sure you take advantage of this. Otherwise, I will keep asking my questions. John, we are in election time, so without jumping into a deep political debate, what are your wishes beyond the different parties and their respective policies and commitments to our climate transition? What would be your wish for this election in respect to the carbon market? What are you hoping for?
We've made clear certainly for some time that there's certainly, again, what's most important is the amount of emissions reduction that's happening, and that we need to have at least 50% reduction by 2030. And so we've got on offer 26 to 28%, possibly 35% from the coalition, and 43% from the ALP. And so we still think we're going to need to do more to meet and beat both of those offerings significantly. And to drive that, we just got to have better policies. And so the current government has been very strong on supporting voluntary activity and providing some transparency and other initiatives around that, if you're being polite. But we do need public policies. And so we strongly think the safeguard mechanism, which alongside the Emission Reduction Fund, Tony Abbott and Greg Hunt put up what was called the safeguard mechanism, which was there actually to safeguard those funds rather than safeguard the environment, but so that emissions wouldn't rise too significantly. So that still provides a requirement on our bigger emitters to manage and measure, and in some instances make good on emission increases. And so there's actually been, there was $15 million of investment that was required last financial year, for example. So we have had a carbon price, just so anyway, we think that carbon safeguard mechanism should have the baselines more clearly directed down, and put that responsibility on bigger polluters. We're going to need to continue to improve our integrity processes, the method generation processes, and data measurement and other things that go on underneath that. And we're going to need supporting policies in energy efficiency and other things. So there's some of the things that we'd like to see. I might do a little plug. I'm trying to find that before we go, but we do a thing called a carbon conversation, and we've got a conversation around that with some of the policy experts on Friday at 12 o'clock.
Oh, wonderful. I will share the link after this.
So as part of a process we have, and that's a public and free.
Okay, wonderful. Two more questions from the audience. So we have a question from Kathy, who asked, are there global markets and standards for the blue carbon reduction and sequestration?
Yeah, so there are. So Australia's just approved the first of its blue carbon, and that's for a particular area. So it's actually said it's around weir removal. So this is particular around where farmers and cane in particular and others have done that and allowed mangroves to regrow. but there are stronger, there are other broader methods internationally under Verra for replanting of mangroves and planting of seagrass and others. So Verra's
it's crazy. Australia has just one, given all our beautiful, marine biodiversity.
Well, it's again, it comes to, I mean, the process is trying to manage the resources to make sure it's scientifically backed and the like, and so they've been quite conservative in the process for generating that, and so that's the reality. But again, we've also got a blue carbon task force and blue carbon investor groups, and so if you are interested in investing that, then please be in touch with us on that as well, because it is an exciting area, an important area, and again has those everything from biodiversity to even resilience.
That's right. And we know that the ocean and water is playing a huge role in carbon sequestration. So we need to support our ecosystems there. There is a question from Lisa. So Lisa is jumping back to you mentioning marketplaces. What is currently available in Australia? And so you said we can find this marketplace on your website. Are there other marketplaces we should be aware of?
I've just posted that on the
beautiful. Thank you.
Sorry, that's to the hosts and the panelists. That's not to everyone. So let me just.
Let me see if I can share this to
everyone.
Everyone.
There we go. I got that.
There we go, to everyone.
I can do the technology. So that's certainly one place. I'm not sure of many other places where we aggregate that. And so, as I say, we are upgrading that over the next actual month or so. So
great.
If you haven't got that, then just go back to the broader Carbon Market Institute site and you'll be directed appropriately. So that's a reference place, and then we actually have a code of conduct that's on our website that you can see who you can be more confident in working with. Okay,
that's wonderful. John, this has been such a fascinating conversation, multifaceted. There is so much to say about carbon markets, but I'm very proud of our discussion today. I feel like we have covered key topics to grasp the importance of the issue. So thank you so much for all your answers. There is more question, but I don't think we have time for it. Question from Eva, which we might take outside of this. So Eva says, prior to the recalibration of the IQ price to around $30, the price was driven to above 50. What role does speculation play in the Australian carbon market? Don't know if you have just a second to answer this, and then we'll wrap things up.
We saw speculators coming into the market more and more, and you can actually, the Clean Energy Regulator also does a quarterly carbon market update. That's another a good tool for you to look at, and others that provide the material. So, but people were beginning to speculate that, realizing these are long-term responsibilities, and so and we are seeing more innovations where banks use their balance sheet to provide that for their bigger emissions intensive to be buying these, and so we saw an increase in financial sectors there. In Europe, there were some concerns about the speculators and whether that was artificially inflating prices, and they did a big review just recently and found that probably wasn't the case. But there's but one you need to continue to watch, and there's and there are questions around whether you need tools like strategic reserves and the like, but that's a much bigger conversation.
Okay, thank you so much. I'm going to wrap up this event by saying a huge thank you again. I would love to quickly encourage our attendees today to sign up for our coming events. So we have at Bloom, we're super passionate about bringing, the leaders in climate action to our community for free, accessible events. So we have 2 wonderful events with listed Australian companies that are really driving change. On the 2nd of June, we will be talking to Vulcan Energy. Vulcan looks at sustainable lithium. We will have a Q&A directly with the CEO of Vulcan. He's taking an hour to talk to us. So please sign up and come along. The other one I would love to invite you all to is a discussion with Sims Limited. Sims is a leader, an Australian leader in recycling materials, notably some metals. So doing really impactful work there. Please come along. It will be on June the 30th of this year, of course. And finally, just a note about making a positive impact and starting to invest responsibly. Jump on our website at Bloom and have a look at our options. You can start investing today to drive change and fight climate change. So have a look at our website, download the app, and join us today. John, thank you so much. I hope you enjoyed this discussion, and thank you so much for all your insights and really detailed response. We appreciate it. I hope everyone in this webinar enjoyed the topic for today. Please share your feedback with us. We are doing these events for you, so tell us if it was helpful and how we can make it better. We have over 1,200 members, and it keeps growing every month, which is great, but we need your help to grow this community even further. So if you enjoyed today, please invite your friends and colleagues along if you think they will find these conversations useful. Thank you for your commitment to be learning and to support climate impact investing and sustainable finance. I think together we can truly create positive impact at scale. So thank you so much for taking the time. Have a wonderful afternoon, everyone. And thank you again, John.
Very welcome.
Good luck for your discussion on Friday. And thank you again so much for your time today.
Thank you.
Thank you. Bye.